Okay, let's unpack this because I will totally admit, when I first looked at the source material for today's deep dive, I had a moment of serious doubt.
Oh, really? What were you expecting?
Well, I mean, usually we get these massive reports or, explosive investigative pieces, but we are looking at what is fundamentally just a table of contents.
Right. It really does just look like a basic web page.
Exactly. It is a single-page index and publication notice for the Berkshire Hathaway shareholder letters written by Warren Buffett. And there are no secret financial models here, no whistleblowers. It is literally just a grid of years and a link to buy a book.
Yeah, on the surface, it is incredibly underwhelming.
Right. But the more you actually sit with this specific page, the more you realize it's not just a directory. Today, we are going to explore the footprint of this collection. We're going to look at the timeline it maps out, the very specific way it's packaged, and the legal guardrails placed around it. Because this page, surprisingly, acts as the skeletal structure of modern corporate accountability.
What's fascinating here is the sheer audacity of what this seemingly boring index actually represents. You're completely right. It looks like a standard table of contents, but it is actually a chronological map of a business empire's cognition.
Wow, okay, a map of cognition. Break that down for me.
Well, the index explicitly lays out individual years in this rigid grid from 1977 all the way to 2024. And right below that, it casually notes that the compiled history actually stretches back even further to 1965.
Which is a massive amount of time.
Exactly. We aren't looking at a reading list here. We are looking at a 60-year psychological baseline.
And for you listening, whether you are, a seasoned investor who tracks market alpha every single day, or just someone who is obsessed with the mechanics of lifelong mastery, this document is an absolute masterclass.
It really is. It has so much to teach us outside of just finance.
Yeah, because it strips away that whole myth of the overnight success. It forces you to confront the brutal compounding mechanics of just showing up, right?
Yep.
Showing up and being held accountable year after year for 6 decades.
It demands that we look at the passage of time not just as a backdrop, but as the primary mechanism for building institutional trust. Because, you simply cannot hack a 60-year time.
I know, you definitely can't. Which actually brings up an immediate logistical problem. How do you even conceptualize a timeline that vast without your eyes just completely glazing over?
It's tough. That's a lot of data.
It is. So I want to break down the specific dates listed in this source to see what they're actually signaling about corporate evolution.
I think the visual layout of the source is our best starting point for that. It is aggressively utilitarian.
Aggressively utilitarian is a great way to put it. It's a literal grid just marching down the page. 1977, 1978, 1979, steadily down to 2024.
It's not trying to be flashy at all.
Not at all. It feels like this imposing calendar. Every single year is isolated, demanding to be clicked on and read. But here's where it gets really interesting to me. The visual grid, the part that is cleanly indexed year by year, starts at 1977. Yet the text describing the compiled book explicitly states it contains letters from 1965 to 2024.
Yes, there is a clear discrepancy there.
So why the discrepancy? Why does the formalized grid start in 1977 if the communication actually began 12 years earlier in 1965?
That 12-year gap is actually the physical evidence of maturation. It shows us how institutional practices are literally built from the ground up.
Oh, I see. Because they weren't always this massive powerhouse.
Exactly. Back in 1965, Berkshire Hathaway was just a struggling textile manufacturing company that had just been taken over. It was not the monolithic holding company we know today.
Right. It was a totally different beast.
So the communications from 1965 to 1976 were likely foundational. They were smaller, perhaps a lot less formalized, just tracking the messy early days of reallocating capital out of a dying industry.
So you're saying the timeline itself acts as kind of a fossil record.
A fossil record. I like that.
Yeah, like the pre-1977 years are the evolutionary soup, and then 1977 is when the creature finally walks onto land and, solidifies its skeletal structure.
That's a really good way to look at it, because by 1977, the modern architecture of the company focusing heavily on insurance float and major equity investments, that was largely taking shape.
It was becoming the Berkshire we actually recognize.
Right, and the communication strategy had to evolve to match that new operational complexity. The introduction of that strict, formalized grid in 1977 represents a shift from just mere corporate reporting to a deliberate, institutionalized philosophy. It became a required discipline.
Okay, I want to push back on the idea of this being uniquely disciplined, though.
Okay, let's hear it.
Well, I mean, every publicly traded company is legally required to put out an annual report. That's just the law. They all have grids of PDFs on their investor relations pages.
True.
So what really separates this specific grid from the boilerplate PR fluff that every other Fortune 500 company churns out every spring?
The difference lies in two things: the mechanism of authorship and the economic climates that were being navigated.
Okay, tell me more about that.
Look at the span of that grid again, 1977 to 2024. Just think about what a CEO is writing through during that time.
There's a lot of chaos.
An unbelievable amount. You have the crushing stagflation of the late 70s. You have Black Monday in 1987.
The dot-com bubble bursting in 2000.
Exactly. The global financial crisis of 2008. The 2020 pandemic.
That is a wild ride.
And most corporate annual reports, they are written by a massive committee of PR professionals and lawyers. Their main job is to obfuscate risk and manage immediate quarterly expectations.
Yeah, they want to smooth everything out so the stock price doesn't tank.
Right. They constantly change their tone, their metrics, and their entire narrative framework depending on whether the market is up or down.
They totally pivot.
Yeah.
If the stock is down, they suddenly want to talk about, adjusted EBITDA or some vague long-term synergy. They change the yardstick to make themselves look better.
But this index represents a single author using the exact same yardstick through every single one of those catastrophic market events.
Wow, okay, that is different.
When you maintain a continuous, unbroken chain of communication through the 1970s inflation and the 2008 credit freeze, you cannot hide behind PR pivots.
Because the contrast would be way too obvious.
Exactly. The timeline itself forces cognitive consistency. The strategy of writing the letter, of having to explain the why behind your capital allocation, regardless of the macroeconomic weather, that becomes a forcing function for better decision-making.
That actually makes the grid less of a historical archive and more of, like, a real-time accountability engine.
An accountability engine, yes, precisely.
It's not just a record of what happened in the past. It's the knowledge that you have to write this letter next year, and you have to place it in this grid next to all the others. That pressure actually dictates how you behave today.
It creates a structural moat. Think about it, a CEO who knows they will have to explain a complex derivatives trade in plain English to their shareholders in next year's letter. Well, they're far less likely to authorize that trade in the first place.
That makes so much sense. If you can't explain it simply, don't do it.
Right. The timeline is essentially a governance mechanism disguised as a reading list.
Man, that transition from a simple timeline to a literal accountability engine that brings us directly to the specific format the source is actually offering.
Which is a crucial part of this whole document.
Yeah, because knowing you have to write a letter every year is one level of discipline. But knowing it will never, ever be changed is another level entirely. The language in this publication notice is highly, highly deliberate.
The phrasing they chose for the compilation is arguably the most important piece of text on the entire page.
So let's look at it. The source states, I'm quoting here, "For shareholders and others who are interested, a book that compiles the full, unedited versions of each of Warren Buffett's letters to shareholders between 1965 and 2024 is available for sale at this link."
There is a lot packed into that one sentence.
Right. So what does this all mean? I really want to focus exclusively on that one word, unedited.
It's a very intentional word choice.
Why would a company with infinite resources go out of its way to specify that a 60-year compilation is completely unedited? From a basic publishing standpoint, wouldn't a curated, polished, lessons learned version be infinitely more digestible and marketable?
Marketable, yes, absolutely. It would sell a lot of copies at airports, but it would completely destroy the core utility of the archive.
Really? How so?
The insistence on full, unedited versions is a direct assault on hindsight bias.
Okay, walk me through the mechanics of that. How does the word unedited actively fight hindsight bias?
Well, hindsight bias is that psychological phenomenon where we convince ourselves that past events were entirely predictable, but only once we already know the outcome.
Like saying, oh, I totally knew the housing market was going to crash in 2008.
Exactly. And in corporate history, this bias is absolutely lethal. When a company writes a retrospective, they naturally sanitize the narrative. They can't help it.
They want to look like geniuses.
Right. They edit out the investments that went to zero. They delete the paragraphs where the CEO was completely wrong about a macroeconomic trend. They draw a perfectly straight logical line from a decision made in 1982 to a massive triumph in 1995.
Ah, I see. It's the we knew it all along syndrome. It makes the leadership look like literal fortune tellers rather than just people managing risk in the moment.
Precisely. By locking themselves into the full unedited versions, they are voluntarily burning their own boats.
No going back.
None. They're stating that you will read the 1987 mindset exactly as it existed in 1987, totally devoid of 2024's context.
That takes some serious confidence.
It does. You get to see the mistakes, the flawed assumptions, and the real-time uncertainty. This is incredibly rare in finance. Usually, proprietary models or investment strategies are locked in black boxes. Here, the unedited nature means you are getting the raw, real-time source code of the capital allocation process.
Let me play devil's advocate for a second, though.
Sure.
Is it possible that unedited is just a byproduct of efficiency? Like, honestly, maybe it's just easier and cheaper to slap all the PDFs together into a single giant book and sell it, rather than paying some editor to synthesize 60 years of text.
If this were any other entity, perhaps I'd agree. But look at the target audience the text explicitly calls out for shareholders and others who are interested.
The and others part.
Yes, the and others. They are actively inviting the general public competitors, students, everyday retail investors to analyze this unedited raw data.
It's an open invitation.
Exactly. If efficiency or laziness were the real goal, they wouldn't commercialize a compiled book and explicitly invite the world to scrutinize it. By presenting it unedited to others who are interested, they are democratizing access to institutional knowledge.
It's almost like a public service at that point.
It is an educational mandate. They're essentially saying, here is the unvarnished record of our cognitive process. Learn from the mistakes we couldn't edit out.
Which completely flips the script on how Wall Street usually operates, right? I mean, the standard playbook is to guard your alpha, your edge, with your life.
Oh, absolutely. Secrecy is the default.
You don't just give the general public 60 years of unedited diaries detailing exactly how you evaluate businesses. You charge exorbitant fees for that kind of insight.
And that tension between giving away the philosophy for practically free and protecting the underlying value of the enterprise, that is exactly what makes the final element of this index so critical.
You're talking about the legal caveat at the bottom.
The velvet rope around the exhibit.
Okay, let's get into this, because at first glance, I wanted to completely ignore this part of the source material.
Most people do.
Right. At the very bottom of the index, in all caps, it reads, all shareholder letters include copyrighted material reproduced with permission. Now, I'll be honest with you. To anyone who has ever scrolled to the footer of a website, this just looks like standard, copy-pasted legal boilerplate.
The classic terms and conditions.
Yeah, the stuff we all blindly click past. Why are we treating a basic copyright notice as a profound piece of this puzzle?
Because context is everything. Think about what we just discussed. You have just spent a page inviting shareholders and others to consume a fully unedited 60-year archive of your deepest business philosophies.
Right, an open book.
You are actively democratizing the knowledge. To immediately follow that open invitation with a strict, capitalized copyright notice, it creates a very deliberate legal and philosophical boundary.
So it's not just lawyers justifying their retainers. You're saying the copyright serves a structural purpose for the archive itself.
If we connect this to the bigger picture, copywriting this specific material isn't about preventing someone from, printing out a single letter and reading it at home on their couch.
Right, they want you to read it.
Exactly. It's about narrative control and narrative integrity. In the financial sector, information is instantly commodified. If these letters weren't strictly protected as intellectual property, you would have thousands of third parties, investment banks, algorithmic aggregators, internet financial gurus, repackaging, altering, and monetizing the text.
Oh, man. See the mechanism there.
It would be chaos.
Yeah, they would take the unedited 1977 letter, chop it up into bullet points, strip away all the nuance and context, and sell it on social media as, like, the proprietary Buffett trading system.
Exactly that.
The original intent would be completely distorted by the financial industrial complex.
Which brings us to the linchpin phrase, reproduced with permission. It signifies that while the knowledge is open for consumption, the expression of that knowledge remains strictly guarded. It prevents narrative arbitrage.
Narrative arbitrage, that's a great term for it.
By maintaining an iron grip on the intellectual property, Berkshire Hathaway ensures that the only way to consume this 60-year history is exactly how they intended, full, unedited, and directly from the source.
It's a paradox, but a really brilliant one. To keep the knowledge free and authentic, you have to literally lock it in a legal vault.
You have to build a moat around the truth.
The copyright doesn't keep the public out. It keeps the exploiters from mutating the text. It guarantees that when a reader buys that compiled book, they are actually getting the unfiltered 1965 to 2024 timeline not some Wall Street analyst's heavily edited interpretation of it.
It legitimizes the entire compilation. It reminds the reader that they are handling a proprietary asset of immense value. You can look at the blueprint, you can learn how to build your own engine from it, but you do not own the blueprint.
Wow. This completely changes how I view this simple index page. It really is not just a list of links.
Far from it.
It's a highly sophisticated delivery mechanism for corporate philosophy.
It's the architecture of a legacy, honestly, just hidden in plain sight.
Let's bring this all together because we've covered a massive amount of ground today, from literally a single page of text.
We really did.
We started by looking at a visual grid of dates, 1977 to 2024, anchored by a compiled history reaching all the way back to 1965. And we discovered that this isn't just a timeline. It's an evolutionary map that tracks the maturation of a company.
And it serves as that real-time accountability engine we talked about, forcing cognitive discipline through decades of market chaos.
Yeah, the stagflation, the crashes, all of it. We also saw how the deliberate choice to publish the full unedited versions acts as a defense mechanism against hindsight bias.
Burning the boats.
Burning the boats, exactly. It prioritizes raw, contemporaneous reality over a sanitized, polished corporate history, inviting the public to actually learn from unvarnished truth.
And finally, we unpack the tension in that capitalized copyright notice.
Which turned out to be way more than just legal boilerplate.
Oh, absolutely. It's a narrative shield. It protects the integrity of the archive from being distorted or commodified by outside forces, ensuring the unedited history remains exactly that, unedited.
It is a remarkable synthesis of consistency, transparency, and protection. And for you listening, the application here goes far beyond corporate finance.
It really does apply to almost anything.
This source is a physical blueprint for how profound value is actually generated in the real world. It proves that mastery isn't the result of a single brilliant pivot or, perfectly edited retrospective. It is the brutal, unglamorous work of showing up, committing your thoughts to the record, and holding yourself accountable through every conceivable shifting climate, year after year, for decades.
The discipline to maintain that unbroken chain is just so incredibly rare, which leaves me with a final thought for you to consider based purely on the mechanics of this archive.
Let's hear it.
If you had to write an annual letter about your own life, completely unedited, every single year for nearly 60 years, what story would that unbroken timeline tell?